Why silver is always most confusing right before big moves. Most people think silver moves because of news, a headline, a rate cut, a crisis. But if that were true, silver would be easy to trade. Instead, it's almost always most confusing right before the biggest moves. And that's not accidental. Silver doesn't fail people because it's volatile. It fails them because it behaves in ways that feel wrong at exactly the moments when people are most confident. The times when silver looks broken, disappointing, or stuck are often the same moments when pressure is quietly building. That's the part most investors never get warned about. There's a very common belief about silver. When fundamentals are strong, tight supply, rising industrial demand, monetary pressure, geopolitical risk, silver should confirm that strength smoothly. People expect alignment. They expect price to validate what they already believe. But silver rarely moves that way. In fact, when expectations are the highest, silver often does the opposite. It hesitates, it chops, it pulls back, or it simply refuses to move. That behavior frustrates people right before it matters most. Here's the part that's uncomfortable. Silver doesn't move to reward belief. It moves to clear positioning. When too many people are leaning the same way, even for the right reasons, price often moves against them first. Not because the thesis is wrong, but because the structure isn't ready. This is why silver can feel broken at the exact moment fundamentals are strongest. Most investors look at silver through headlines, but silver trades through pressure, paper positioning, liquidity events, margin changes, forced selling elsewhere in the system. Those forces don't show up neatly in news articles. They show up in price behavior that feels wrong until it suddenly makes sense later. If you look back at every major silver move, there's a pattern that repeats. Before repricing, silver almost always goes through a phase where it tries to convince people nothing is happening. Price action becomes noisy, momentum disappears, confidence fades. People start asking, why isn't silver responding? That question usually comes right before the answer arrives. This is why silver is such a psychological market. It doesn't move when conviction is highest. It moves after conviction has been exhausted. By the time price finally accelerates, many of the people who were right early have already been shaken out. That's also why stability matters more than spikes. Violent upside moves grab attention, but quiet absorption, especially after bearish expectations, often tells you more about where pressure actually is. Absence of weakness can be more important than presence of strength. Right now, silver is in one of those phases that feels unsatisfying. It isn't collapsing, it isn't exploding, and that frustrates people who expected immediate confirmation. But markets don't move on schedules. They move when positioning clears. Once you understand this, you stop asking why silver isn't moving, and you start asking a better question. What pressure is the market still trying to release? That single shift changes how you experience volatility. It keeps you from reacting emotionally to moves that are designed to test patience, not logic. This is the lens I use when I look at silver. Not predictions, not targets, but structure, pressure, and behavior. It's the difference between watching price and understanding it. If this way of thinking helps you make sense of silver, especially during the confusing periods, you'll probably want to be here going forward. Because this is how I frame the market, week by week, as the story unfolds.